CPI reports at 7:30 today, about half an hour ago, came in all in the red. Now, how do you trade that? How do you know how to react to that? What the Fed wants to see is this red. What this is implying is that their inflation for the month has curved down a bit. It's not increasing, it's decreased. Additionally, unemployment claims came out at the same time, with more unemployment. This is a picture perfect long. Okay, picture perfect long. And what happened is all the liquidity in the market disappears. All the algos, all the market makers stand on the sidelines. And if you can capture this information quick enough, this is what you get. This is the S&P 500 futures, and that is a $3,500 move. Okay, so being prepared for this kind of a play is, something. As you get good at reading, expecting the fundamental news, how to play it. I mean, this could have been micros. If you wanted to trade micro ES, so you'd have been risking about $100. Put your swing at the low here or at the top, whatever your algorithm, RVQS, you would have hit targets in seconds. But anyway, this is what we see. And now let's talk about how it even reflects on technicals. Technicals, you would almost feel like they're almost automatically things are priced in because it's harmonious. It's like a song. So here's our daily chart on the S&P. Okay, and we can see that on this last swing low, we have the 200 MA here. This is daily, each candle today, and we have a nice pullback as we mentioned several days ago. So, you can go back to things I mentioned days ago and reference that, and it starts making sense. Okay. So very kind of a standardized, nice fractal flow back upwards, and the news pushed that up additionally. So it just makes a lot of sense. You want to look here at the weekly. Again, I've been talking to you guys about this for several days now in the last few recordings. So what do you have here? You have a nice bounce, a little bit of a, bear trap here on the weekly. Now, the Nasdaq and Bitcoin, yes, they're on the opposite side of this. So they're already kind of instigating that bear move, especially on a weekly, definitely on daily. But the S&P is the big daddy, and so far it's still holding up on this weekly at that MA. So, expect now that yesterday markets did sell off, markets sold off to sit on the sidelines to see what this report was going to be. Bottom line, this report was very important. Okay, and based on that, boom. So when you have a grasp, an understanding of fundamental data, how to translate that data, and then combine it with your technicals, you're not left in the dark. You're looking at markets out from the big forest, out from space with the big Google Maps views, and this market just catapulted 100 points already. Expect to see a little pullback at the cash open, but then, rally back more into the green for the day. Okay, these computers just did nothing but bought by millions and millions of volume. Okay, so that's about it for the day. A little bit early, just wanted to kind of mention this. I've been talking to several guys about this and why it's important, significant in your trading to expect this, not say, well, what happened, 7:30 and this thing or SPY. A lot of people wonder why these ETFs are gapping. If we went on a daily on an ETF, your ETFs are going to gap because of the futures, right? So just pay attention to what the futures are doing. And, if you're going to play options for that day, that's your choice. But we like to play a lot of futures here at Viper. That's our preference. And also because we have an algo that we run. So, you can run the algo. Oops, let me exit that here. Yesterday was a really fine day. I wanted to show you guys, a replay on that, a recap, and I will, because what this was a selling day, and our Viper VQS is able to capture a lot of these short entries and make a good day, and that is relative to the charts on the macro time frame here. We had a nice selling day, bounce off of these highs, a little pullback. Naturally expect that we continued down, and then eventually we're going to get this run up. But this CPI this morning, consumer price index, and basically your inflation report justified everything from the overnight trading, which was a little bit stagnant. If we look here in the micro view of things, in Europe session, Asian session, this is all we did. Let's zoom in. we were in this kind of this range here, right? This box. And right here, lo and behold, 7:30, CPI comes out, and boom. And why we fly so much is if I was to show you this on a platform like Bookmap, all the algorithms and all the market makers go flat right around here. A lot of the hedge funds have to pull flat because they're not allowed to trade. They can lose their job. Some of those like little private prop firms. So what happens is liquidity is blank. So when a big player comes in here and takes the head start on the news and drops, 500 lots, 1,000 lot contracts, this thing's going to move very fast. It stabilized here a little bit, but all of this time frame was within 1 minute. All of this right here, guys. This is, if you look at the time axis on the bottom on an 8 range bar, this whole box here occurred in 1 minute. So it's stabilized, and then now it's probably a lot of people chasing it on in, but then there you go, and there's a nice long. Could have turned your algo in the long there. That was another 1660. A lot of nice places here to go long, because you know what the news is giving you. That was a catalyst for this big long day. All right, guys, I hope you find that helpful. There's no super mystery in trading, but then it has to still be affordable to your risk profile, what market you're trading, how much you're able to risk to your reward. But you can see the opportunities on technicals. You can combine fundamentals and have some expectation, and then from there, make a plan. Had we turned on our algo even late here, we would have maybe caught a little bit of heat and then another big winner. And again, we're using our algo on ES. We're trying to use particular smaller time frame ATR to try to build our risk, our stop and ticks, and our take profit in ticks. Lately, we've been doing a lot of 20 by 40s on the ES, and it's been working out pretty good. All right, everybody, take care out there. Have a good trading day. Be safe. Don't forget, a lot of the liquidity is going to happen today. Tomorrow is, if I'm not mistaken, it's Veteran Day, so people are going to play their game today if they can, and they're going to be out. Okay, don't expect big moves tomorrow on the markets. Okay, take care. Bye bye.